companies to do better and also to report better profits. In terms of other, I would say positives. One is economy, as I said, is coming back on track. We had a scare in April and May of 2021 when we had the second wave. But now the vaccination numbers are increased. On a lot of days, we are seeing 1 crore plus vaccines being injected in a single day, which is a record, and no country in the world has been able to do this. Already 75 crore vaccinations have been administered. And if we continue with this rate, it is expected that by November, we would have almost 80-85% of every Indian eligible for vaccination, which is 18 years and above, would be vaccinated. And I think that is giving us the confidence that this third wave and fourth wave, which some negative people spread, should not be anything significant. And when you have vaccination, you might be contracted, you might have the virus, but it is a very mild version. You don't get hospitalized, or the chances of even dying is very, 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 very low. So that is also one of the positives. The last bit is the government has come out with monetization plan. They have come out with privatization and disinvestment. They have announced $1 trillion to be spent on infrastructure spending. With the private sector all a long time. I think it's finally we are going into a scenario where GDP growth can be upwards of 7.5–8%. What can be cautious, points? One is, I think there is a lot of euphoria, particularly in some of the smaller companies. We are not negative on the mid and small cap. We continue to be positive, but we would advise caution, particularly in companies which are tip-based. A lot of WhatsApp, a lot of Twitter tips keep on coming, and stock prices are moving and luring investors. So please be a little careful there. And second is we have to moderate our return expectations. A lot of funds have been able to give 60 will not continue, or would not. It would not be logical to expect these kind of returns going forward. One will have to be a little bit more moderate in terms of return expectations. So from our perspective, our return expectation is anywhere between 13–14% to 17–18% for the broader markets. I think these would be decent returns for an investor who wants to invest from a 3–5 years perspective. The second concern, obviously, some geopolitical event. I think Afghanistan was a small concern, not a big concern, because it's a very small country and India does not get directly impacted by the actions there. Yes, there might be a little bit of benefit which our neighbor Pakistan might take out of that those events, but it doesn't seem to be a very big concern. The other concern obviously would be COVID related. The number of cases, particularly in US and Europe, had shot up. They are now under control. Our view definitely is not of a very extensive third and fourth wave. But if some new variant comes, the probability is very slow. But if some new variant comes, then there might be some concern. I think otherwise, from a buy and hold perspective, from a 3–4 years perspective, as I said, 13–14% to 17–18% return is still possible. From Abakkus perspective, we are clearly focused on fundamental based investing. I think the whole focus is on the earning potential of the companies we invest in. This would be a short brief on the market. I would now request my colleague Rahul Veera to just touch base upon the strategy which is on ICICI platform, and also what we are trying to do in terms of the portfolio creation.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.